We're currently in recession and in a pandemic. The unemployment rate is rising and the economy is contracting. Nevertheless, it is surprising that we continue to see growth in inquiry levels on realestate.com.au. This is primarily because we do have a stable banking system, record levels of stimulus, and for now, job loss has primarily impacted young people. There are, however, problems in the market. The first is that rental demand is very weak, primarily because of the job loss amongst young people. The second is that this is flowing on to investors, and we're seeing very little investor activity. So much so that inquiry levels are down 30% from last year. Although the rental market is weak, we are starting to see signs of improvement. In particular, search activity is now up 50% from last year, and we're also seeing a reduction in rental listings. This is quite different to the early days of the pandemic. Although the rental market is starting to improve, we are seeing some locations still being impacted by rising listings. These areas are typically close to universities and rely heavily on foreign students. The problems in these suburbs are so substantial that the 10 suburbs that have seen the biggest increases in listings now account for 50% of the total increase in rental listings. For now, investor activity is likely to remain low. The rental market is weak, there's limited capital growth, and many areas with high proportions of investors are not doing too well in terms of rental demand. Longer term, however, this will become problematic. And when the economy starts up again, if we don't have enough investors in the market, we won't have enough rental properties. Right now, it is a renter's market, but quite quickly, it could shift to an investor's market. And as a result, we may start to see a rapid rise in rental rates.